Most traders don't fail because they lack intelligence, market knowledge, or charting skills. They fail because they outsource their thinking. They quietly believe someone else sees something they don't. Someone else understands the candles better. Someone else has a more accurate interpretation of the trend. And somewhere deep inside, they convince themselves that another trader's technical analysis must be more correct than their own. That invisible surrender destroys more accounts than bad setups ever could. The moment you allow another trader's opinion to override your own interpretation, you give up the only advantage you ever had: the ability to stay consistent with your own system. Every profitable trader eventually reaches a moment where they realize this brutal truth: following someone else's technical analysis feels safe. But it's actually the most dangerous decision you can make. The illusion begins with the subtle belief that charts have only one correct interpretation. You see a possible breakout forming, but then on Twitter, someone posts a bearish divergence. On YouTube, an influencer screams that the market is about to collapse. In a Telegram group, a trader claims the trend line has already broken. Suddenly, you don't know what you see anymore. Your original analysis, the one you spent time building, is now drowned under a pile of contradictory opinions. You hesitate. You freeze. You doubt what you knew only minutes ago. That hesitation is where your account begins dying. Not from the market, but from the noise of other people's charts. The saddest part is that none of these people know anything about your trading system, your risk tolerance, your strategy, your time frame, or your psychology. They're analyzing the same market, but they're not operating inside your rules. So, why would you follow them? The truth is that technical analysis is not a universal language with exact answers. It's a lens, a perspective, a way of interpreting structure. But it is not a commandment carved in stone. Two traders can look at the same chart and come to two completely opposite conclusions. One sees a long-term uptrend. Another sees a short-term pullback. One spots a reversal pattern. The other sees a continuation pattern. And guess what? Both can be right. Both can make money. Both can follow their own strategy and walk away in profit. The difference isn't the analysis, it's the consistency, the commitment to their own method. That's why listening to other traders' technical analysis is so dangerous. Not because it's wrong, but because it breaks your consistency. It pulls your mind in a direction your system was never designed to follow. People think the market punishes bad entries. It doesn't. It punishes inconsistency. A trader with a mediocre strategy but massive consistency will outperform a trader with a perfect strategy but no discipline. When you follow someone else's technical analysis, you're switching systems mid-trade. You're abandoning the rules that built your confidence. You're breaking your own flow. You're betraying your own mind. And the moment your internal alignment breaks, trading becomes emotional chaos. You doubt yourself when you win. You blame yourself when you lose. You stop trusting your own eyes. And you quietly become addicted to external confirmation, waiting for someone else to tell you what the chart means. That addiction is fatal. The market rewards traders who know exactly what they are doing and operate within their own framework. You don't need to be the smartest. You don't need perfect accuracy. You don't need to predict every move. But you do need to trust your analysis long enough to let it play out. The painful truth is that most traders don't actually want to trade. They want to be told what to do. They want reassurance, certainty, validation. They want to feel like they're making the correct decision. But trading doesn't give you that luxury. The charts don't give you guarantees. And no other trader, regardless of their experience, can give you certainty. The moment you look for certainty in someone else's analysis, you detach from the only thing you control, your process. You have to understand something fundamental. Every trader you listen to is dealing with their own psychological biases. Their analysis is shaped by their risk preferences, their emotional state, their past trades, their experience, their goals, and their blind spots. Some traders are naturally biased to see reversals because they specialize in countertrend trades. Others are biased to see momentum and continuation because that's what they've trained for. Some use time-based charts, others use range charts. Some prioritize liquidity zones, others prioritize trend lines. Their analysis makes sense within their system, but that doesn't mean it fits yours. You cannot adopt an entire worldview from a single sentence. But that's exactly what you do when you follow someone else's chart. So many traders blow accounts, not because they were wrong, but because someone else convinced them to doubt their rightness. Imagine this. You analyze a setup. Your system says, buy. You've seen this setup 100 times. You know the risk. You know the stop loss. You know the target. You take the trade. But then in a group chat, someone posts a bearish head and shoulders. Another says the market is in distribution. Another says it's supply and demand rejection. Your stomach tightens. You panic. You exit early. And then your trade hits the original target perfectly. The market respected your analysis, but you didn't. You sabotaged yourself because you let someone else's chart override your system. That's not a trading loss. That's a psychological loss. On the flip side, consider this scenario. You see nothing convincing on the chart. Your system says no trade, but someone online posts a perfect-looking setup. They draw magical lines. They highlight areas you never noticed. They speak confidently, almost prophetically. You enter even though the trade isn't part of your strategy. The market moves against you, and you lose money. But worse than losing money, you lose trust in yourself. You think, maybe I'm just not good enough at reading charts. No, you just left your lane. You allowed someone else's perspective to replace your own process. Traders don't fail because of the market. They fail because they keep abandoning their own method. The scariest part is that most traders don't even realize how much other people's charts sabotage them. It's not just copying trades. It's the subtle destruction of your mental clarity. You stop seeing the chart through your method. Instead, you start seeing it through the lens of every analysis you consumed that morning. YouTube strategies, Twitter posts, Discord opinions, Telegram setups, TradingView ideas. Your mind becomes a messy collage of other people's lines and zones. And this mental clutter kills your ability to execute with conviction. When your mind becomes crowded with external opinions, your system becomes useless. Here's something most traders never admit. Technical analysis is a mirror of the trader, not the market. It reflects your beliefs, not reality. It reflects your strategy, not truth. It reflects your rules, not universal laws. So when you adopt someone else's technical analysis, you are adopting their beliefs, their strategy, their rules. Even if they don't match your psychology, that mismatch creates internal conflict. And internal conflict is the ultimate destroyer of trading performance. You cannot trade with clarity while your mind is being pulled by two conflicting systems. You must understand the deeper psychology behind this. Your brain is wired to avoid uncertainty. When you look at a chart alone, your brain feels fear because you are responsible for the outcome. But when you see another trader's confident analysis, your brain relaxes. Someone else seems sure. Someone else appears certain. That false sense of safety is seductive, but it's deadly. Because now you're trading based on someone else's confidence instead of your own conviction. And when the market moves against you, as it always does at some point, you will have no psychological anchor to hold you steady. You will panic because it wasn't your idea. You will exit too early or too late because you don't actually understand the setup. You will blame yourself afterward, and your confidence will erode further. This creates a downward spiral where you rely even more on external opinions. Before you know it, you're not a trader anymore. You're a follower pretending to trade. If you want to become consistently profitable, you must learn to detach emotionally from other people's charts. You must learn to respect your own system enough to trust it. even when others disagree. You must learn to accept that your analysis will sometimes be wrong, and that's okay. Wrong analysis is part of trading. Every trader takes losses. Losses aren't the issue. The issue is inconsistency. The issue is abandoning a proven system because someone else spoke with more confidence than you did with your own rules. The issue is thinking someone else has a clearer picture than you do, when in reality, they are just as blind to the future as you are. The strongest traders don't have perfect charts. They have perfect detachment. They hear noise, but don't react. They see opinions, but don't absorb them. They observe other traders' viewpoints without allowing them to override their system. They build a mental firewall around their analysis. They don't seek confirmation. They seek execution. They understand that markets aren't predictable. They are probabilistic. And probabilities only work if you stay consistent long enough for them to play out. The moment you switch to someone else's perspective, you break the math of your own probabilities. Imagine two traders standing in front of the same chart. One trades price action. One trades indicators. One trades supply and demand. One trades liquidity sweeps. One trades trend lines. One trades order blocks. None of them are wrong. None of them have a monopoly on truth. But each sees the chart through a different lens. If you mix these lenses, you blur your vision. If you adopt all of them, you become confused. If you chase the best method, you never master any method. That's why relying on others' technical analysis creates long-term psychological damage. You become a collector of opinions rather than a builder of convictions. When you stop listening to other traders' technical analysis, you start hearing something more powerful, your own trading voice. That voice is the source of consistency, discipline, confidence, and clarity. But most traders never discover it because they drown it with the noise of others. You need to create space for your own analysis to breathe. That means muting unnecessary influencers, leaving toxic group chats, avoiding chart commentary that contradicts your rules, stopping the habit of scrolling through setups after you've already made your decision. The more you protect your mental environment, the more profitable you become. Not because your analysis suddenly becomes perfect, but because your execution becomes clean, pure, uncontaminated by doubt. You will reach a point where you no longer feel the urge to ask others what they think. That's when you've crossed the line from follower to trader. That's when your trading becomes yours. And at that point, you no longer fear losses. You understand them as part of your statistical edge. You no longer fear missing out. You trust that your system will give you another setup. You no longer fear uncertainty. You embrace it as the nature of the market. And most importantly, you no longer fear being wrong. You know that wrong is temporary, but inconsistency is permanent death. Your trading journey changes dramatically the moment you decide that your own analysis matters more than anyone else's. The moment you stop looking for external confirmation, you begin building internal conviction. Conviction is the real currency of trading, not money, not accuracy. Conviction. Because conviction is what allows you to hold trades long enough to win, exit trades fast enough to protect yourself, and execute setups without hesitation. Conviction doesn't come from other people's charts. It comes from deep repetition of your own system, from trusting your framework through wins and losses, from respecting your rules more than you fear being wrong. No one else can give you that. You must build it yourself. Your entire trading transformation begins with one brutally honest admission. Other traders' analysis is irrelevant to my system. Not wrong, not bad, just irrelevant. Because their analysis isn't built on your rules. It doesn't align with your psychology. It doesn't connect with your risk profile. It doesn't match your time frame. And it doesn't compensate for your emotional tendencies. Your success is not hiding inside someone else's chart. It's hiding inside your discipline, your process, your mindset, your ability to trust what you see and live with the results. And the moment you fully accept this truth, you gain something most traders never have: freedom. The freedom to think independently, the freedom to trade without noise, the freedom to win or lose on your own terms, the freedom to become a real trader. The more deeply you understand this, the easier trading becomes, because suddenly the market stops feeling like a battlefield of opinions and starts feeling like a personal execution environment where only your rules matter. You stop caring about what some influencer said in his latest video. You stop refreshing Twitter to see who is bullish or bearish. You stop checking TradingView ideas to see if someone drew a line differently than you did. You stop watching other people predict the next move as if they have a secret connection to the future. And for the first time, the noise fades. The silence feels strange at first, almost uncomfortable, because you're so used to letting other traders' voices echo in your mind. But that silence is where real trading begins. That's where you start hearing your own reasoning without interference. You begin to see a setup clearly, not because someone confirmed it, but because your system has identified it. You start to trust the process, not out of arrogance, but out of repetition. And when the market moves against you, you're not crushed anymore because the loss is part of your own system, not a punishment for following someone else. That shift is where consistency grows, and consistency is where profitability lives. The irony is that listening to other traders' technical analysis destroys the very skill you need most: pattern recognition. Your brain learns through repetition. When you analyze a setup the same way hundreds of times, your subconscious begins to understand nuance that no video, no mentor, no group chat can teach you. You start to see how candles behave at certain levels, how momentum builds before a breakout, how liquidity sweeps form before a reversal, how volatility expands during accumulation. But if you constantly switch your perspective because someone online drew a different line, you destroy that repetition. You never give your mind the chance to encode patterns deeply enough to trade them with confidence. You become a wandering observer instead of a skilled practitioner. And that's why traders who consume too much analysis from others plateau. They never stay inside one framework long enough to master it. They dabble, they wander, they float between concepts. They chase complexity because simplicity feels too vulnerable. But mastery only emerges from simplicity repeated thousands of times. And that simplicity disappears the moment you start caring about someone else's chart. You must realize that technical analysis is personal. It's emotional. It reflects who you are as a trader. Some traders thrive on quick scalps. Some thrive on long swing trades. Some feel comfortable entering on deep pullbacks. Others prefer breakouts. Some rely on volatility. Others rely on structure. And these preferences are shaped by your personality, your patience level, your psychology, your emotional tolerance for uncertainty. Following another trader's technical analysis is like borrowing someone else's personality. It doesn't fit you. It doesn't feel natural. It causes friction. It creates internal conflict because your actions no longer match your emotional wiring. That's why following someone else's analysis feels forced. You hesitate more. You panic more. You second guess more. Because psychologically, the trade isn't yours. It belongs to someone else. And you're trying to live with the consequences of a decision you didn't fully believe in. The more charts you consume from others, the weaker your own voice becomes. You stop trusting yourself. You stop believing in your ability to read the market. And the tragedy is that many traders think they need more and more external information to get better, when in reality, the opposite is true. You get better when you reduce input, not increase it. You get better when you stop consuming new methods daily. You get better when you stop looking for a magic indicator that will confirm your decisions. You get better when you stop letting strangers online shape your emotional state. You get better when you simplify your environment to the point where the only voice left is your own. Your clarity grows, your confidence grows, your discipline grows. And with time, you begin to understand that technical analysis is not about predicting the market, but about creating a repeatable structure for decision-making. That structure collapses when polluted by other people's opinions. Think about how many times someone else's technical analysis made you exit too early. You had the perfect setup. It aligned with your rules. It aligned with your plan. But someone online said the trend was reversing, so you exited. Minutes later, the market moved exactly as your system predicted. You didn't just lose profit, you lost trust. Or think about the times someone's bullish analysis made you hold a losing trade longer than you should have. Your stop loss was clear. Your risk was defined. But someone insisted that support was strong, so you held. And the market crashed right through it. That wasn't their fault. It was your decision to replace your rules with their confidence. That decision is where the damage happens. And the worst part? You repeat the same mistake because following someone else feels safer than standing alone with your own analysis. You have to teach yourself how to sit with your own uncertainty. That is where true trading confidence comes from. Not certainty, but mastery over uncertainty. You don't need reassurance. You need discipline. You don't need predictions. You need execution. You don't need someone else's opinion. You need your own process. The moment you try to eliminate uncertainty by relying on others, you instantly weaken your own decision-making ability. Instead, embrace that feeling of doubt as a required part of trading. Learn to act even when you feel unsure. Learn to trust your rules more than your fears. Learn to value consistency over comfort. Because every time you stick to your system, a small part of your trading identity gets stronger. And every time you listen to someone else, a small part of your trading identity dies a little more. One of the harshest truths you'll ever accept is this: no trader is coming to save you. No guru, no coach, no influencer, no group chat, no friend, not even the professional analysts you look up to. They can guide you, but they cannot replace your process. They can educate you, but they cannot trade for you. They can share insights, but they cannot give you conviction. The only person responsible for your results is you. And the sooner you take full responsibility for your own analysis, the sooner you'll stop sabotaging yourself with conflicting opinions. Responsibility gives you power. The moment you stop blaming others, you start growing. You start improving faster. You start finally understanding your system at a deeper level because you're no longer hiding behind external noise. The strongest traders in the world don't follow other people's technical analysis. They follow their own rules with almost religious discipline. They may listen, they may observe, but they never internalize someone else's perspective. Their system is their identity. Their rules are their protection. Their analysis is their compass, and they trust it even when it hurts. That is the level of conviction required to survive long-term in the markets. And you cannot reach that level if you constantly dilute your mind with the noise of others. You have to build your own framework. You have to refine it through experience. You have to adapt it over time. But you cannot borrow clarity. You must build it. There is a moment every serious trader experiences, a moment where everything changes. It's the moment you stop seeking external confirmation. The moment you stop asking others, "What do you think about the market?" The moment you stop feeling anxious when your analysis doesn't match someone else's. The moment you stop panicking when your view is different. The moment you finally say, "I don't need them. This is my system, my trade, my responsibility." That moment is the birth of your trading independence. And once you experience that shift, you never go back. The noise loses its power. The opinions lose their influence. The voices lose their authority. You become grounded in your own decisions. You execute calmly. You think clearly. You operate with a level of confidence you've never felt before. Not arrogance, but alignment. That alignment is priceless. It turns trading from emotional chaos into a structured performance. You're no longer swayed by someone calling for a crash. You're no longer confused when someone predicts a rally. You're no longer tempted by someone else's perfect setup. You simply follow your rules. You enter when your system tells you to enter. You exit when your system tells you to exit. And you sit in silence when your system gives no signal. That is how professionals trade. They don't chase predictions. They execute setups. They don't seek validation. They seek consistency. They don't react to noise. They react to rules. That is the difference between amateurs who drown in opinions and professionals who thrive in clarity. When you stop listening to other traders' analysis, something else happens. You start learning from your mistakes much faster. Because now when you lose, it's your setup, your rules, your trade. You know exactly what to adjust. You can track your performance properly. You can analyze your data accurately. You can identify patterns in your own behavior. You can refine your system logically. But when you trade based on others' analysis, your losses are confusing. You don't know whether the setup was bad, or if you executed poorly, or if the advice you followed was based on a different system altogether. That confusion slows your progress. It keeps you stuck. It prevents you from evolving as a trader. But when you become fully responsible for your own analysis, your growth accelerates. You learn the market's rhythm. You understand your own weaknesses. You discover your strengths. You sharpen your edge. You deepen your knowledge. You become a real trader. The day you stop listening to other traders' technical analysis is the day you finally begin trading with clarity and purpose. You will feel a shift inside. Your mind will feel lighter. The chart will look cleaner. Your decisions will feel simpler. Your execution will feel smoother. And you will finally understand that trading is not about finding the perfect analysis. It's about building a system that fits you, mastering that system, and respecting it relentlessly. When you stop chasing opinions and start respecting your own rules, trading stops feeling like gambling and starts feeling like a craft. The craft becomes art. The art becomes instinct. And instinct becomes confidence. If you truly want to rise above the 95% of traders who fail, you must do something they refuse to do. Think for yourself. Protect your mind. Protect your rules. Protect your clarity. Stop letting strangers rent space inside your trading psychology. Stop giving authority to people who don't know you. Stop adopting methods that weren't built for you. Let other traders draw their lines and share their predictions, but don't let those lines and predictions infiltrate your discipline. Stay in your lane. Master your system. Trust your process. And accept that your trading identity is forged through your own repetitions, not through someone else's commentary. You will not reach consistency by following others. You will reach it by trusting yourself long enough to become the trader you're meant to be. And once you arrive at that level of independence, you will look back and realize that other traders' technical analysis was never the enemy. Your habit of listening to them was. The moment you stop listening, your clarity increases, your confidence increases, your discipline increases, and your profitability finally begins to align with your effort. That is the trader you must become. That is the trader who survives. That is the trader who wins. And it all starts with one simple decision. Don't listen to other traders' technical analysis. Listen to your own, your